All right, I'm going to show you why I never ever sell real estate, at least not for cash. You can exchange it, but never sell for cash, and why this system is designed and incentivizes you to keep the asset into perpetuity so you can pass it down to your heirs, to your kids, and not selling it. So we're going to go down the obvious as to why I'm not doing it. And after watching it, I bet you'll never ever sell your income producing properties. Your primary residence is different. We are strictly discussing income producing real estate. All right. So what is the trap of selling real estate? The one item, and it is the elephant in the room nobody really talks about. It is the depreciation recapture. So anytime you depreciate the asset, whether it's 27 and a half years, which is the traditional depreciation for residential, some people choose to accelerate it where they do the cost segregation studies. Sounds amazing because if you structure it right, it can offset some of your active income so you don't, it gives you that big paper loss. But here's the thing, if you ever sell, you have to recapture it. That's right. You have the IRS wants that money back. And that is a flat tax of 25% right here. You can see it. Then you go, of course, you're going to have the federal capital gains on everything, and that's 20%, and then your state up to 20%, and then your state is going to vary. It can be zero tax all the way up to 13%, depending where you live. If you live in one of those high tax states, California, New York, you better be ready. You're going to pay a lot of money. And then, of course, you're going to have the net investment income tax, 3.8. So you could literally be paying 30 to 40% in taxes. Now, that's a lot of money, especially if you've been holding highly appreciated asset and you've been depreciating it for all of this time. So you're going to have to pay it back. And a lot of people don't realize that the depreciation recaptures 25%. Now, let me tell you, most banks on a cash out refinance would go actually up to 80% loan to value. But let's even be more conservative, 75% loan to value, meaning they will lend you 75% of the value of the home, and you can take that money and keep it. Remember, a loan is not income. So you could actually have more money completely tax-free than selling the asset. Literally, the one thing you just have to do is maintain it in perpetuity. You can never, ever sell it. I know it's hard for a lot of you to grasp, but you just simply can't sell it. If you do, you're making the IRS rich and you're costing your family and future generations a lot of wealth. So, what the hidden penalty, as I just discussed, depreciation recapture, you have to pay it back. Flat tax, 25%. So the IRS is not stupid. The tax code is designed literally for you to keep the asset. You can have tax-free wealth. The price, keeping it. As long as you keep it in your family, you can do it. I mean, you can 1031 exchange it to more properties, but just never ever sell for cash. And again, it can be hundreds of thousands of dollars, depends on how big your portfolio is. And here's a quick example: 300,000. That's $75,000 tax bill just in the depreciation. I just had a client at a 32-unit apartment complex. He did a cost segregation study, and he actually had a little more than 300,000 in depreciation accelerated. So if that client was ever going to sell that asset, it's going to be catastrophic in terms of a tax bill. So you better believe that property will never be sold, at least not for cash. It can be sold and then exchanged for better. You can turn 1 into 3 or whatever. So you can exchange it, never ever sell it. So why never sell is a power move? Okay, well, first of all, it's tax free. Keep your cash flow. You make money 7 different ways. Don't remember the 7 ways. You should know them. So you keep the cash flow. The depreciation, which is a paper loss, offsets it. So there's no taxes. You can refinance, and you're going to buy more assets with leverage. And biggest thing is you maintain control. And then you defer into perpetuity. So you can literally defer your taxes forever as long as you don't give in to the temptation to sell, which is stupid, Don't do it unless something catastrophic happens. You can sell one, but just know the real cost as to what it is. You're going to lose all your tax benefits. You're going to make the IRS a lot of money, and then you lose the asset. So don't do it if you can help it. Now, here's the other one. What is step-up basis add debt? So let's say you have a house, you bought it for 100,000, it depreciates to 400,000, then you die. Meanwhile, you've taken loans against it. It doesn't matter for your heirs. Step up in basis, the fair market value on the day of death is their basis, which is incredible. So then your heirs, your kids can then use the same system, buy, borrow, die, take loans against it, and have it completely tax-free. So you can literally teach your kids and your heirs how to legally avoid tax forever in their family. So as long as they maintain it and they don't sell it, nobody would ever pay tax. But even if they do sell it at their death, there should be no gains because of this step up in basis. So no tax if sold immediately. But again, if you have done your job and you have shown your kids from example how to not sell and hold them and the benefits of holding them, nobody's going to be wanting to be selling the asset because it's tax free and it's something real. Remember, real estate, it's real and you can pass it down. So if obviously you got to structure it right, we're going to talk a little bit, LLCs, I'm not going to talk too much. Make sure a proper structure goes without saying, don't keep it just in your personal name. Don't be sloppy. Treat it as a business. Don't commingle all of your funds, right? Because everything you do, it's not that you can't do it. What do you do in event of a lawsuit? The first thing you do is you subpoena bank records. I don't care if you're suing a business partner or somebody suing you. The numbers tell the whole story. I do what's called litigation support for a lot of attorneys, and they gave me all the files. And my firm, I actually determine if the corporate veil has been pierced. Let me tell you, 90% of the time it has been pierced. It's very rare for me to see somebody so disciplined that they didn't pierce the veil by spending on unrelated business activity purchases. So make sure you structure it right, protect it because you've worked very, very hard to keep it and get it. So you want to make sure that it is on point. So here's the gig. How do you get tax free? Well, you refinance, keep refinancing, and you're going to get it all for free. No taxes, tax free. So you can do cost segs, which is accelerating that depreciation that I told you, which means you, instead of 27 and a half, could be 5 years, 7 years. And then you can offset that active income, which is taxed at the highest rate. So tax savings can be insane as long as you don't sell them. So you keep borrowing equity, right? And you buy more assets that cash flow. And then you control the cash flow. That's it. You buy, you borrow, you die. So as long as you don't sell, you're going to be just fine. So selling versus hold that. I mean, that is, save this screenshot. I just described all of it. It doesn't matter. Selling only to exchange, never sell for cash. Just if there's one thing you get out of this video, never sell for cash if you can help it on your income producing properties. You want control, you want cash flow, you want depreciation, and you want future equity growth, which is appreciation. So don't do it. You're going to cost yourself a lot of money, right? So BBD, buy, borrow, die. So you buy your cash flow, refinance, keep repeating, holding forever. So you're going to build wealth. But if you don't do it, you're just going to give it all to the IRS because the tax system is literally designed for keeping the asset. It is not designed to sell it. The wake sell, the hardest thing you can do is hold the asset, which is exactly what you should be doing, right? BBD, remember BBD, it sounds like something else, but it's not. What it stands for: buy, borrow, die. And all the wealthy understand it. Debt, leverage, loans is not income. So you can borrow against your appreciated assets. Guess what? No taxes. So you have those highly appreciated real estate, take them, they steal cash flow, then you can go spend on the wants in life. You want nice watches, cars, whatever, or use the cash flow to offset if you're getting a loan for that. So never trade appreciation for taxes, and pass your heirs, your kids, something real, which is the real estate. And for that, I'm going to leave you. Remember, don't sell, buy more real estate. Go.